Hi there everyone, I'm Rob Fontana-Raval, the CBI's Head of Economic Policy, and with me here I've got Rhiannon.
Hi, I'm Rhiannon Jones. I'm Principal Tax Policy Advisor at the CBI.
We're going to take you through the CBI's reaction to today's autumn statement that the Chancellor set out. So firstly, on the economy, the OBR, the Office for Budget Responsibility, have made quite a large downgrade to their growth forecasts. They now expect growth of 1.4% next year rather than the 2.2% they previously expected. And then they forecast growth to pick back up and reach about 2.1% by 2019. As a result of slower growth, that has an impact on the public finances. You can see from the light grey line on this chart that previously, back in March, the OBR were expecting the Chancellor to reach fiscal surplus by 2019-20. When you look at the impact that lower growth has on the public finances, shown in the light grey, the middle line here, you can see that it knocks that target off course, and the public finances were still projected to be in deficit by the end of the Parliament. Then when you layer on the policy measures that we've seen from the Chancellor today, which on a net basis cost money for the Exchequer, you can see that that borrowing forecast is even further in deficit. Rhiannon's now going to take you through the CBI's reaction to some of the policies we've seen from the Chancellor today.
On the tax side, we'd say overall it's been a positive autumn statement for business, and we've been pleased with the boost for productivity and the focus on that. We've also seen increased commitment to spending on infrastructure, R&D and affordable housing, and that will help businesses across the UK to invest with greater confidence for the long term during these turbulent times. We've also seen a commitment to more stability on tax, and that was through the commitment to the business tax roadmap and also to the less frequent fiscal events in the future. We've also seen a new fiscal rule, which we support for the short-term flexibility, but also in the long-term commitment to balance the books, and also an affordable rise in the living wage in line with the Low Pay Commission recommendations. We've had some mixed reaction to business rates. We've seen limited action on overall reform, but some welcome exemption for fibre optic cables. And whilst we understood that there would be some changes to salary sacrifice, there will obviously be some concern for employers who invest in the health and well-being of their employees. More concerning is some of the other measures. So insurance premium tax, that's the fourth time we've seen that hiked since 2010. And also disappointing that there's been no action on capital allowances, and we would have liked to have seen more there to help support those businesses willing to invest today.
Thanks very much, Rhiannon, and thanks everyone for tuning in. If you'd like to find out more, you can follow us on Twitter @CBI Tweets.